Okay, so basically, new week, obviously bearish candle on here. We're basically at the weekly take profit unless the daily can pull back up a little bit more and then we can drop. So basically the daily's down here. Daily is in trend. We just need it to pull back up a little, like have a daily top wick, which will be a 4-hour pullback, and then we can look to drop lower. So about here, let's start the week on 11 p.m. Monday, Tuesday, midweek, and then Friday, end of the week. So 4 hours pulling back, 4 hour. And that's the thing, it doesn't matter how deep the 4 hour pulls back. We're just looking for that rejection candle, right? So 4 hour pulls back, we measure this candle, didn't close below the 0.43, so it's invalid. We need to wait for a deeper pullback. Boom, engulfing. So this engulfing candle on here, this is considered a rejection candle, right? So now that we have our rejection candle, we would be looking for a shift to accumulation break retest, and then we'll jump in. So you know that this candle closed on here. Go to the 15. You can see the 15 is bullish, so we need the 15 to shift. We need to break above this structure right here. Okay, we did shift structure here, and it's one of those impulsive moves, so we can have a quick retest of like this zone here, and then price could drop even more. Like that. Touch the base. Let's see. Yeah, we did retest. If we get like an engulfing now, we can sell it lower. Retest, retest, rejection, but not an engulfing. Engulfing. Stops above level. And then we can just see, since this is already extended beyond the stop loss, beyond the take profit, I don't see this dropping any lower. Really and truthfully, you shouldn't be taking trades after this because boom, get smacked. And then it ends up going the direction that we want it to. So I don't think there's anything we could have done better on there. The only thing is we didn't really put our stops above like any sort of proper structure, right? So if we're doing it here, this didn't create any sort of structure, so this is kind of improper, right? Like the proper stop loss would be like here. So if we did it there, we would still be in the trade, but it doesn't look like this is going anywhere. Let's see. Tuesday, midweek. Okay, if we're still in a trade by midweek and we started at the beginning of the week and we're still in it at midweek, let's see what happens. Okay, there we hit 2R. It's by Thursday we hit 2R. So we didn't, like, we went over from the beginning of the week entry on Tuesday all the way over to now Thursday. So it's been 2 days holding the trade for 20 hours. Perfect. We get our 3R. So this was a good trade. And even though we went past the take profit because of how everything's set up on there, that's fine. The only thing is that when we broke, we found proper. This was all good how we did the retest on there. It's just when we set our stop loss, we have to remember to put our stop loss below the shift to struck. Because I was just thinking, I'm like, this is so far off now, like this is not going to work. We need to find a shorter shift to structure. So like here, above here, even above that level on there, that would have been good. So you just can't do it above here because you just can't do it here because if you notice the structure point is this is the lower high, this is the lower low, right? So if you get an entry here, you need to put this stop loss above some sort of lower high, right? Like I was looking at it, I'm like, yeah, this is a lower high. But it didn't, a lower high is when it actually like breaks through, right? Then you have a shift to structure or break of structure. That then is considered a lower high. It's only considered a lower high if you break a lower low, right? So we would look and this would have been because like technically if you look, this kind of broke something on there, right? So this broke a lower high. So this would have been a lower high right here. This broke a lower low because price was bullish here. Came down, broke that lower low, that higher low right there. So then it became a lower high. And then we had another break of structure. So because this one created a break of structure, this would be the stop loss. All right. So we can then know that we can put our stop loss above here if we want. Cover that, cover that, cover that, or even here, right? This would have been a little tight, but it would have worked just fine and we would have had a really good risk reward. But this didn't really, well, we did, okay, okay. Right here, you look, we broke the lower, this right here, broke this lower low. So then this became a lower high. So because this is a lower high, we can put our stop loss right there. We put it right above it, and there we go. And this was good because we had the weekly in our direction. Even though we were basically at weekly take profit, that was fine. The daily was basically there as well too. So everything was, kind of like at there already. And then we passed it. And then the 4 hour just had that pullback and then rejection. So we had the pullback and reject. So we had the rejection on Monday, and then after we got the rejection, we know that we can just take an accumulation break, engulf in and go from there. This was kind of like, if you look at this, you'd be like, oh, this is kind of at two, like this wasn't really at like when price pulled back or all the way to the front here. So I guess the only way we'd be able to tell is if it lines up with a area of interest, right? If it lines up with an area of interest, then it's considered a three. If not, then it's considered a two. So let's see at that time, if we go here, it's a pro trend trade, so we'd have to look for a daily area of interest. It would be easier to see on the 4 hour. And the thing is we have this, right? Um, so this zone on here means that there is a daily area of interest. So let's see. One touch, two touch, three touch in 2022. It's kind of sloppy, but it's basically there. Like you do that, right? Do all that, and then 4 hour, and boom. Yes, this top part here is in that zone. Yep, perfect. So it is an area of interest because we had a daily area of interest. Um, and Yeah, this was considered a proper pullback because we pulled back to a proper daily area of interest. And we can tell that because we used our fib kill zones on here to know that it did line that to be like, okay, we could have a potential one here. Then we went searching and then we found it. So once we found it, it was confirmed. So yeah, and then you just play that trade out. Basically, we got to confirm, and then the accumulation break retest happened even lower than it happened at a lower low, but we already got the confirmation on here. So once we got the confirmation, right, and even this is another confirmation here, this engulfing pattern here, this is that saying that, okay, we've now rejected that zone. We can look for the accumulation break retest. Because remember, after we get the rejection, we look for the accumulation break retest or the rejection can equal the accumulation break retest. So when we get that engulfing candle, it can be the accumulation break retest at the same time. So that's why it happens on the 4 hours, so every 3, 7, 11. So we need to pull up and be ready like 10 minutes before so we can know because, like this closes on here and the entry is pretty much right away. We had a little bit of drawdown, which is fine, but basically right when this closed, this was what anything was ready, everything was ready. And same thing again, like we broke a lower high on here. So because we broke a lower low on there with this candle, this can now become the lower high, right? So just like how we did on the 15-minute on there. We know where the structure points are and where we can put our stop loss based on what structure broke the lower high.